A reverse market crash. Hi, I'm Bob Sophiea. I'm the leader of the New Home Collective, and our team together has sold close to 2,000 homes, and we have over 900 Google reviews. In this video, I'm gonna give you a little bit of history of the market, what's been going on for the past couple years, and then I'm gonna take us into the future, and I'm gonna give you my predictions on what's gonna happen with the real estate market this year. Please click the subscribe button. Make sure you give me some comments and some feedback to let me know what I could do, what I could include, what I could take out of this market report, how I could make it better, and how I could make it more valuable. Let's get to it. I'm gonna go over some data first, okay? So in January, we're gonna look at January of this year compared to last year. One of the things that we like to look at is how many listings sold. So for our entire market, that's 30 MLSs. This year, there were 694 listings that sold. Last year, there were 744. Probably has something to do with how many listings hit the market. In 2023, there were 1,157 listings that hit the market in January. This year, only 1,012. Almost correlates, all these numbers kind of correlate together, but the pending sales, 951 went pending this year, 1,014 went pending last year. That's our entire market. Now, if we go to the Lexington area, there were 189 listings that sold in Fayette County this year. Last year, there were 201, so that's down about 6%. The amount of listings, now this is weird, because the amount of listings was different. There were 243 that went on this year. Last year, there was 228, so there was actually an uptick in listings and a downtick of sold listings, which doesn't really go along with the rest of the data. So pending sales, they did the same thing. They're down this year. They're down 242. Last year, they were at 249. So I guess they're not really down. They're really close to the same. That's the numbers. Not much has changed. It's kind of boring. It seems like the same thing that happened in December. There's a little bit of movement, but I want to tell you what I'm seeing. What I'm seeing is a major uptick in positivity from the consumers, from the people that we're talking to, the people that said 6 months ago that they weren't going to buy a house for the next couple years because they're waiting for the rates to go to 3. Are now getting back in the game. We're sending more and more people to our preferred lender, Peak Financial. We've been sending, probably 4, 5, 6 pre-approvals a day is what we're getting now. And I think a lot of people, they're seeing the downtrend of the interest rates. We were sitting around 7%, 6.7 or something this month is where we've been. That's down. We were almost 8.25 at one point. The interest rate's going down. We're hearing that on the news that the interest rates may go down to 5%. And the people that hear that, like I do, it says, well, if some people are getting back in now, well, guess what's going to happen when the rates go to 5%? That's what we're seeing from buyers. So a lot of them are just sitting there prepared, ready to pounce on a house when it hits the market. From the seller side, I think a lot of people have come to terms with the fact that the rates aren't going to go back down to 3%. The appreciation that they've seen close to 40% since COVID hit, jeez. They never thought they would have that much equity in their house in the first place. And a lot of times what can happen is that equity can offset that interest rate. You're putting more money down. It's going to affect the payment in a way that the interest rate's not going to be as impactful when you have a lower loan. Back in 2020, November of 2020, the interest rates were at 2.75%. The average price of homes in 2020 was $230, okay? Back then, if you bought a house, your payment was $1,062. Fast forward to January of 24, average sales price was $317.5, and the interest rates were around 7%. You do the math on that, that's $2,176 is what a principal and interest payment would be. Both of these loans are 10% down. So same house, 10% down. If you bought it in January of 2024, your payment's $2,176. If you would have been smart enough to buy, which I wasn't, I should have bought 25 houses in November of 2020 when the prices were $230 and the interest rate was 2.75. It's over $1,000 less for the same exact house. I get it. I get why people have, hit the sidelines and have waited to see something change in the market. But those changes we're seeing from the front lines. We're not seeing them in the numbers yet. My prediction, we're gonna see some of that appreciation start going way up. When we get these people back in the market, as we get in further into spring and into summer, I see them becoming a frenzy again. All these people that waited, all this pent up demand from people saying, I'm gonna wait and see what happens with the interest rates. I think when they drop 0.5%, we're gonna see more people. When they drop a whole percent, we're gonna see more people. Drop 2%, we're gonna see more people. If you've thought about buying a home, here's what we can do. Get together, we'll sit down. We've put together a whole presentation on how to buy a home in today's market. Whether you've bought one home or you've bought 20 homes, getting on the same page with one of our agents can be really helpful. If you want to know what your house would sell for, what the equity you have in your house, right now in today's market, there's never an obligation to sign any papers or to do anything with us. Be happy to come out and do an equity report on your home, give you an idea of what it's worth. Just like any of the other videos, I mean, if there's anything you can tell me to do to improve, I'm open. Like, I want to get better at this. I want to provide more value to you. Please leave me a comment, subscribe to the channel, hit the like button, and we'll see you on the next video. Thanks for watching.